Hello and welcome to another Smaulgld podcast. Today is July 2nd, 2019, and tonight's topic, gold hits all-time high versus British pound. What does that mean for silver? Yes, indeed, the two are connected. We often talk on this channel about gold, not just versus the dollar, the price of gold, but the price of gold versus foreign currencies, and we often point out that gold versus many of the second, third, and fourth tier currencies almost inevitably outperforms those currencies. For people living in those countries, gold is a far better store of wealth, far better way to save money. And we do see gold consumption in a lot of those countries on a per capita basis is fairly high. Countries like the Iran with the Iranian rial, Argentine with the Argentine peso, Turkey and Turkish lira, Brazilian real, Venezuelan bolivar, countries like that where their fiat currencies are weak, and fiat currencies in general are weak. But those countries really have a problem, and gold serves as a significant store of value in those countries. And it's not surprising that gold is constantly hitting all-time highs versus those countries. In any given year, gold will outperform those fiat currencies. What's surprising, though, today we're noticing that Smaulgld subscriber John Cox pointed out to me that the price of gold in British pounds is now at an all-time high. And I suppose a lot of people are focusing on Boris Johnson and Brexit and things going on, the slide in the pound, but people have missed, or at least John astutely pointed out, that the gold in the British pound is now at an all-time high. Here's a look at a chart here. You can see just on 2 years, the price of gold used to be about 900 pounds per ounce. It has reached close to 1,200 pounds per ounce, which is the record from 2011. Now, 2011 is when gold hit a record in U.S. dollar price at $1,900. I think it was $1,911 an ounce. And right now, gold is only, let's just take a quick look in the aftermarket, it's at $1,440. When I say only, that's still up, but it's still significantly below the $1,900. And that's because of all the fiat currencies, the dollar is the strongest fiat currency. I guess the Swiss franc gives a run for its money, maybe the euro. But for the most part, the dollar is the strongest, most widely used currency. And in any given year, it may outperform gold. There's some years where gold does go down versus the dollar. But since 1971, gold has massively outproduced the dollar. But the British pound now, with its problems, is showing weakness versus gold, and gold is showing its strength. And let's just take a look at the all-time high now of gold. That's just a recent chart showing the last couple of years. And on this chart, you can see, for those of you who are listening on just the podcast, we're showing a chart of gold versus British pounds from 1998 to 2019. If you want to catch up later, sometimes it's better to go to smaulgld.com. I post all of the charts on the website. Okay, so you can see here right now we're at the same, just slightly ahead of the all-time high, reached at the same time the U.S. dollar was at the all-time low versus gold in 2011. I believe it was in 2011 in April. There you go. The gold versus the British pound. You now have a top-tier currency underperforming versus gold and actually hitting an all-time low versus gold. This augurs very well for gold. We said at the beginning of the year that if gold cracked that 1375, 1380 in dollar prices, we may be off to the races. And I was thinking $1,500, $1,600 by year end. We're going to get into what that has to do with silver. But one of the reasons gold is also going up, let's just move away from British pounds, but we're seeing negative interest rates. And one of the cuts against gold is not only does it not pay interest, it costs to store the gold. Whether you're storing it in GLD, they take a cut. Whether you're storing it in Swiss vaults, at Brinks, wherever you're storing it, there is a cost. There's a cost of insurance, and that's a cut against gold. Well, when you have negative interest rates, there's a cost right there to having your money held somewhere else. But we're also seeing that gold, this is not just gold versus the British pound, because the British pound has issues with Brexit and Boris Johnson and the turmoil. Gold already hit an all-time high earlier this year in Australian dollars. There you go. It is now at 21.05. Now, this is yesterday. That is at an all-time high. Gold versus Australian dollars. Now, Australian dollars are not necessarily a weak 5th, 7th tier currency. They're a pretty decent currency. And here you can see, this is a chart now from 1998 to 2019. And The all-time high in Australian dollars actually was only $1,800 back in 2011, at a time when the Australian dollar was actually stronger than the US dollar. As you can see now, the Australian dollar, gold versus the Australian dollar, is now at $2,060 per ounce. And it's not just the Australian dollar, a top-tier currency that is underperforming versus gold by a big amount, and that is the Canadian dollar. Look at the Canadian dollar here, the loonie. Gold versus the Canadian dollar now over $1,900. Let's take a look at a longer-term chart and see how gold has performed versus the Canadian dollar since 1998, like we took a look at for the Australian dollar and also the British pound. And you can see not quite at its all-time high, but getting pretty darn close there. Looks like the all-time high for gold versus the Canadian dollar was around $1,900 an ounce, and you can see it's very close there. Let's take a look at a couple of other countries, or let's take a look at the euro. Not actually a country, but a conglomeration of countries. And you can see a big spike in gold versus the euro, up to 1,305 euro per ounce, and over a 20-year period, not quite at the all-time high. You can see the all-time high was close to about 1,390, but we're moving closer. So gold definitely making a run this year versus all currencies. And finally, let's take a look at the Swiss franc, probably the one other currency, even though they try to weaken it, still a very strong currency. Gold moving on up the last couple of years from about 1,160 francs per ounce up to 1,440. It's very close to the dollar. And you can see, however, when the Swiss franc peaked, or the gold peaked against the Swiss francs, it was only about 1,650. So the franc has weakened versus the dollar, also weakening versus gold. And you could see, though, it is still below the all-time high. Now, what does all this mean for silver? Well, first of all, gold and silver, as we pointed out on this channel many times when we discussed the gold-silver ratio, has a different demand and different supply profile. Gold's profile is essentially investment demand, made up of individual investors, institutional investors, and central banks. And then about 50% of their demand is from jewelry, 40% from investment, and about 10% for other industrial uses. Which means that in times of uncertainty, safe haven bids, and so on, the investment side catches a bid. The investment side gets the demand, and people, investors, institutions, and central banks will buy gold. That'll drive the price up. Now, jewelry, while it's 50%, some of that jewelry, not all of it, is investment jewelry. But the jewelry demand will decline when the price rises. So, for example, costume jewelry, 10 karat gold, 12 karat gold, 14 karat gold. If the price rises, if it's a discretionary purchase, you may see a decline in jewelry demand. Now, even investment jewelry demand, a lot of it from Asia. For example, in India, they will buy anywhere from 18 to 22 to 24 karat gold necklaces, bangles, bracelets, and that is considered an investment, even though it's also considered an adornment. But Indians will pull back, other cultures will pull back on their jewelry when the price rises, because they know the prices rise and fall. And in a sense, they're always in the market, so they don't necessarily buy unless they have to. And the only time they have to is for weddings, but if it's a discretionary purpose, even if it's an investment, they might hold off if the price rises. But the investment demand is one where you see people stampede into gold. And the demand side for industry, well, that's pretty much, that's inelastic. If they need the gold, they need the gold. They're going to buy it for the electronic, for the space helmet, whatever they're using, or dentistry. They're not going to stop buying gold just because the price has gone up. So the price of gold will rise on the basis of investment demand, and you may get some demand shaved off of that investment demand on the jewelry side because the price rises. Now, why is this important for silver? Well, we've talked about silver. Silver has a very odd investment or demand profile because 70% of it is for industry. And while that's a good thing, as Bernie would say, that's a good thing. The good thing is that the demand remains constant. Electronics, there's certain things where silver's relatively indispensable at current prices, even at 2x or 3x prices. They're not going to substitute silver in solar panels or in electronics if the price rises. They will only consider doing that if the prices maybe go 5x, 10x, because the amount of silver in the final overall, the cost per unit, the silver cost per unit in any given item is not significant, especially in electronics. Now, that gives a base to silver's demand. Now, that demand has not been skyrocketing. That demand has been relatively flat. And that's why I've never understood why people are saying silver set to skyrocket. Electronics demand has been down over the last 10 years because smaller devices, thrifting, they figure out how to use less silver. Same with solar panels, even though we've seen a massive increase in the amount of solar panels, same thing. They learn to use less silver paste. Sometimes they can use silver nanoparticles. They haven't substituted silver, but the demand for silver for industry has remained relatively constant. It has not risen very much overall. Now the investment demand has gone down. So recently you have flat industrial demand, declining investment demand, and then the jewelry demand, the silverware demand is pretty much flat as well. A bit of an increase in India, who are the largest buyers of silverware. But silver's basically gone nowhere because it hasn't picked up an investment bid and it's not really lighting the world on fire for its industry. However, one of the things I mentioned about silver is it still has that investment component. And when gold takes off, and this is why it's important, and you'll probably see silver sales start to rise in Great Britain. As gold gets more and more expensive, we've seen this in the past, people begin to look at silver. When I say look at it, I mean as an investment, because a lot of people are going to start looking at gold now. Gold is definitely a FOMO trade in the West. As I mentioned, maybe in India, they'll hold off on gold purchases when the price rises. But in the West, it's definitely, look at that, we're chasing the price. Gold's going higher, we're buying it. And then the madness of crowds, they look at silver and they say, well, that hasn't gone up. That's like cheap gold, isn't it? May or may not be true, but people still view silver as having a monetary component, or at least an investment component, a hedge against inflation. And silver starts to get some of the otherwise gold money. Doesn't have to get a lot of it. It's never going to get the big money from all the players, but it might attract a big player or a few big players who might allocate a certain amount of money into silver. And only a small amount of investment money going into silver can boost the price significantly, because silver is a very tiny market. Now, this year, silver has gone up, gold has gone up, because we've mentioned negative rates. When you have negative rates, as we mentioned, the cut against gold is it doesn't pay interest, and you got to pay to store it and insure it. Well, if you got to put money in a bond that's negative yielding, that makes it a wash against gold, and then gold can go up. The bond's not going to go anywhere. Now we've seen a recession, we've got this trade war going on, and that's really what's driving the gold price. Now, if you remember at the beginning of the year, I did mention, let me pull you a clip here, I said silver, and you know I mock people who say this, is set to skyrocket. We had done a poll back in December of last year on where people thought the price of silver was headed. And only 11% said set to skyrocket. I was one of them. Listen to what I said back on December 29th. It's early. All right, well, I'm going to give you my prediction. In my prediction, you're going to be probably pretty surprised. I believe in Q, my mom, and mugs. Yes, Percenti Girl. I believe in those two things. Mugs are real wealth. All right, let's go to the questions. And I'm going to tell you what I think, and you might be a bit surprised by what I have in my predictions. Price of silver will Silver set to skyrocket or stagnate in 2009. Silver will. My answer, skyrocket. Bingo, there you go. By the way, that cue my mom mentioned, it was during a live stream, and I was reading the comments. By the way, we will have a Smaulgld live stream tomorrow night, Saturday night, silver with Smaulgld on the YouTube channel at 7:30 Eastern Time. Return, at least for this tomorrow night, to Saturday night silver. And the reason I said silver would skyrocket was on the basis that if gold catches a bid and climbs higher, then the silver investment component will come to life. And unless gold came to life, and I gave interviews with Future Money Trends, I gave interviews on SGT Report, on Silver Doctors, all making the point that silver needs the permission of gold to go higher. Silver is not going to lead anything, and we're seeing gold now. I said if gold gets into a sustained bull run, eventually silver will play catch up and then start to move. So I'm still sticking to it. I think that silver will hit over $20 an ounce this year, contingent upon gold continuing to rise higher and to get into the 1500 range. Again, not investment advice, just my observations that we have here. Anything else tonight? I don't think so. I think we covered everything. So we've got the different profile demands of gold and silver and different supply demands. So I think that if gold continues to rise and hit all-time highs versus nearly all currencies, that's going to attract a lot of attention to gold. That'll boost gold demand. That'll boost gold price. And then if we start to get close to gold at all-time dollar in dollars, then you're really going to see a mania. And if you have that mania, it'll only be a short time until silver picks up on it. All right, what do you guys think? Maybe tomorrow night we can revisit this and you guys can give me your thoughts on where you think gold and silver are headed. We've got some other stories. I'll try to do a video tomorrow to catch up so we can focus solely on silver tomorrow night. Thank you very much.